Here back for another video, the Biz Coach, the Credit Repair Boss. Before we jump into today's topic, I want you to check the description in the video. I've got some links down there for some exclusive discounts just for being a part of the community. I want you guys to like the video, subscribe to the channel, and leave any comments if you have any questions. So let's get to today's topic. Get into your dream home even if you have poor credit. You may be asking yourself, well, how can I do that? Well, we're going to talk about it right now. Talking about getting into your dream home even if you have a low credit score today. So most lenders look at three things whenever they're getting ready to make a lending decision. They look at your debt to income ratio, credit score, and your loan to value ratio, which is also your LTV. So you may be able to offset a low credit score by making a larger down payment. You can do this by using, if you have any additional savings or retirement plans, things of that nature. Another thing that you can do is get money from family or friends, and this is called a gift. And most lenders are okay with you using this as a gift as long as you get something in writing from the person who gave it to you saying that it is a gift. So you want to check with whatever lender that you're using to make sure that you go through the proper protocol for this. So you want to start off by finding a mortgage lender that you trust, who can guide you through this process. So for people who are struggling with their finances, a lot of times large banks may not be the right fit for them. Credit unions, individual mortgage lenders, and community banks all have a reputation for helping buyers who have mediocre or poor credit scores. So for example, some credit unions don't even have minimum credit score requirements. Instead, they look at your entire financial picture. So they look at things like your bank statements, like from your checking and savings account. They also look at your income and your payment history. So normally I recommend that you start the home buying process at least 90 days prior to when you want to start shopping for a home, because that's going to give you, 90 days is going to give you several monthly cycles to show that you have positive payment history. So let's talk about how you can get into your dream home even if you have a low credit score right now. So some things that you can do during that 90-day period is you want to check your credit report for errors. You can go to annualcreditreport.com and they will let you download a free copy of your credit report once a year. So you want to go to annualcreditreport.com. And the first thing that you want to look for on there is you want to look at different mistakes that may be on there. Different things like maybe your name is not spelled correctly, or maybe your name is not right. There could be outdated addresses, outdated places of employment. Those are things that you want to get off of your credit report if they're not correct. So removing these errors could boost your credit score by at least 25 points or even more. There was a study by the Federal Trade Commission that said 25% of people in the United States have some type of mistake on their credit report, and that has a negative impact on their scores. So you definitely want to check those errors with the big three credit bureaus, and that's going to be Equifax, Experian, and TransUnion. Something else that you can do during that 90-day period to help boost your scores is to make sure that you start making your payments on time. If you have any accounts that are behind, you want to get caught up on those. You want to make those payments to get the accounts brought up to date. If that's going to be a challenge for you, you can call those lenders or those accounts and just let them know your situation. Hey, I want to get caught up. What type of payment arrangements can we make? And then once you get that account brought up to date, you want to maintain that to show that you have a positive credit payment history. Another thing that you want to do during that period that can help boost your scores and make you look more attractive is you want to keep your credit card balances low. So how much you owe on your credit cards is going to be called like your credit utilization. And this makes up 30% of your FICO score. That's going to be a big chunk. So the less you owe, in comparison to what you can borrow, the higher your credit utilization or the higher your credit score is going to be. So you want to, the rule of thumb is to have your credit utilization less than 30%. That's going to be like the maximum. So if you have, for instance, a credit card with a $10,000 balance, you want to keep what you owe on that at $3,000 or less. So again, if you have a credit card, you have a $10,000 limit on that credit card, you want to keep the balance at $3,000 or less. That's going to be 30%. And then you eventually want to graduate to drop it from 30% to 10%. That's going to drastically increase your scores and make you look more attractive to lenders. Finally, you want to be cautious when applying for new credit. So your credit score drops anywhere between 2 to 4 points every time you apply for new credit. This is going to be called like a hard inquiry, and it remains on your report for 24 months, 2 years. So a couple things happen whenever you apply for new credit. First, you get that hard inquiry, which is a ding on your credit report. And the second thing, if you do get approved for it, that's going to be a new account. So that's going to affect the age of your credit. So let's say if maybe your oldest account is maybe 20 years or even 10 years, whenever you get that new account open, it's going to drop your average a little bit lower because you just introduced a brand new account into your credit profile. So you want to make sure that during the process of looking for a home or getting ready to look for a home, you're not applying for any new credit. You want to shy away from trying to get new cars at this time, new furniture, any type of loans at this time. You want to kind of shy away from that. You also want to be careful about closing any credit cards that you paid off, because this is also going to lower your credit score. Closing a card causes your available credit to drop, and again, that's going to have an effect on your overall credit utilization, and it's going to just overall reduce your borrowing power. So guys, I hope you enjoyed these tips. If you're trying to get into a new home and you're trying to get into your dream home and you don't have the credit scores that you need right now, these are some tips that can help you make that happen. So guys, appreciate it again. I'll see you on the next video. Peace.